Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business.
What's going on, everybody? Welcome to episode 25 of the Collecting Keys Real Estate Investing Podcast. So we're a quarter of a way to 100.
Quarter of the way to a century.
Quarter of a way to a century in weeks, since this is a weekly podcast. But no, it's funny looking back. I mean, back when we first started, and everyone's like, if you're not, everyone always said only plan to do like a few episodes to start because you're probably not going to stick with it. I don't know. I feel like we got a good routine now. This is a fun process. We're starting to get some traction, engagement with listeners, programs starting to build out. It's interesting how quickly things can start to grow if you're just consistent. I think whether that's business, whether that's, building an audience, whatever that looks like, consistency is just the biggest key.
And I think you and I have some really stick-to-itness in everything we do, right?
We do.
Is that a word? Stick-to-itness. We're very sticky, right? And that's the thing too, is it's like when you want to do something, if you know there's value in it, like we try not to do things that aren't valuable to us, right? But if there is value, it is that consistency. Show up every day and just do it. And I think we're doing it. We're a quarter way to a century in weeks.
Yeah. Well, I mean, like I said, that's the number one key to success in literally anything, like personal life, marriage, relationship, fitness, sport, whatever you want to be good at. Right. If you give up quickly, or you don't give it a true thorough shot, it's not going to go anywhere. But and that's a big reason that I think our business has started to do so well, so consistently. I mean, even just this past week, yet again, we got another contract, which is a pretty fat contract, $50,000 assignment fee, that is purely just one that us and the company have stuck to. This lead came into our system, I think it was January of 2021, and we just got signed around this past week, now in the end of March 2022. And, this guy's fallen off the map several times. He stopped talking to us. Us or our team would follow up with them. We've sent them more correspondence, and sure enough, here we go. We got it signed around, and now it's a awesome fee for us. So.
You know what I didn't understand about that? So this seller's not even in our market.
Yeah.
But we got him. Like, well, how did that happen? I don't remember that. Like, he is 5-hour drive away from us. We don't mark it in that zip code or anything.
So he's a cold call. If you look at it, right? So the initial contact was a cold call with a bunch of data that was mixed in with ours. I think it was actually a lead that accidentally came to us.
I think it did, honestly.
Because back then we were using a cold calling company that was doing calling for a number of Northwest companies, and we were getting a lot of leads from over in that area that didn't necessarily make sense and didn't belong to us. Yep. But our guys followed up with it and noticed that there was an opportunity there. And lo and behold, here we go. Now we got a pretty sweet deal. So I think the big thing
I can imagine who it was. Like there's probably a handful of dudes at market over there that you can think of. We got their leads. So gotcha.
Yeah. Well, I can also say though, a lot of those guys, I highly doubt that they would have followed up with them like we have with this guy.
Yeah, probably not.
Because that's been the biggest thing for us is, I actually met with one of our competitors just this past week. Went and stopped by their office because we did a joint venture with them on something last year. So I had to get some tax documents, and he's a good buddy of ours. And he was saying that, their overhead now is like multi-seven figures, and this
7 figures.
Seven figures. Yeah. Like they have several $1 million in overhead. And I was like, okay, well, I guess that's cool. I mean, you got to make a lot of money to cover that. But then I look at their operation versus our operation, and I think, we can probably have similar total bottom line profit to them, but with way less overhead and me to do way less work. And at the end of the day, that's what matters. Yeah.
Yeah. Lean to me. But I will say also, we think out of the box on how to get things done, because if you're traditionally thinking about building a business, you're like, well, I have to hire this staff here. They got to be local. They have to, be fit in this box. It's like, we've never really taken that approach, so to speak.
Absolutely. Yeah. I mean, we have a fully virtual company. We have obviously a handful of people locally here in Spokane, but we also have staff, in other parts of the country. We have staff that's international. I mean, I've literally had had days where back to back to back, I have staff with our local meeting, then I'm meeting with our staff in East Asia, then meeting with our staff in India, then I'm meeting with our staff in Eastern Europe, all like 1 hour after the other. I'm like, cool, I just basically did a world trip all through Zoom. You know,
and they're not like VAs either. Like we do have VAs, but these are like full blown like professionals
skilled people
that are skilled people. So when you think about, people might automatically think, oh yeah, I have VAs too, but no, these are like, we have a marketing manager.
Yeah, I know, right? Yeah, we have a marketing manager from India. We have our web developer and designer from Romania, and they're awesome. They're great at what they do, and you know, they're honestly, I've gone through so many different hiring and staffing processes through American people, and honestly, I would say they're better than a lot of the American candidates that I've looked at.
I agree, 100%.
And not only that, but they communicate well. And something that's actually pretty awesome about having staff in other time zones like that, especially when they're so drastic, is they do a lot of their work when we're asleep. So basically, our business is now being worked on 24/7.
It's so cool.
You know, and you find you spend a lot less time doing kind of, you know, mundane stuff like managing them, because they have their tasks that they need to do. They can't just like hit you up to ask questions. They're forced to figure it out because they're working at, you know, when it's 3 o'clock in the morning for me and I'm sleeping. I'm not going to answer. And they know they got to get their stuff done, so they're just going to do it.
Yep.
You know,
they figure it out. They have stick-to-itiveness.
Stick-to-it. Yeah, they do as well. Exactly. But so aside from that, we are absolutely just rocking right now. I think last time I looked, we have like 14 properties in escrow. We've launched in our second market for the year, third market starting next week. I mean, it's not impossible to think we're going to be in 5+ by the end of the summer, and then who knows by the end of the year. I mean, like the direction that we're going now was not on the docket at the beginning of the year. But, you know, as you feel the traction and systems start to build out, kind of reach a point of like, what the heck, you might as well give it a shot.
Yeah, you have to, like, you set your goals, right? But you have to also be willing to adjust them. Mm-hmm. You know, like I think our goal is still the same. It's just the path we're taking is slightly different than we thought about in January.
Yeah, and when it comes to this business, one of the easiest ways to scale once you start to figure out your marketing and your sales processes is to go to other markets, honestly, especially if you're in kind of a smaller area. Like our area isn't small, but it's only, you know, 400, 500,000 people. It's easy to build up a business where you're saturating that marketing, right? Especially as other players here, like there's not really that much more that we can do to get more deals locally. Like we could probably spend like twice as much money to get like another, let's say, increase our deal flow 10 or 20%. But at that point, we might as well take that same budget and go somewhere else and start capturing that lower 75-80% of the market.
Yep. Hit the low-hanging fruit in a lot of the markets.
Exactly. The ROI is going to be significantly higher than trying to squeeze more juice out of something that you're already maximizing. Mm-hmm. So, and I mean, I think that's also a big benefit of building out a remote business and having our sales systems and everything like that be location independent. Is honestly, it's not that hard for us to do it, because all we're doing is we're changing where we're doing our marketing, and we're changing, you know, the area codes on our callback numbers, and that's literally it. You know?
And I mean, it's really, proof is in the pudding too, because we dropped mail in our second market, and we've already got contracts out there. Like, when did we first drop mail? Like 2 weeks ago.
2 weeks ago, right? Right now we've made 8 offers. We have 5 verbals, and we've sent 4 contracts to people. So I don't know if we have any signed around yet. We must be getting close to one, because a lot of those went out in the last day or two. But yeah, I mean, like, good deals too. You know, and it was a benefit over there because we had a contact over there already who can sort of help facilitate getting comps and those sort of things. But same thing, right? If you've been doing networking and you've been connecting with people, you've been joining groups, like our instant investor program, for example, or you join like other groups that have national presences, you'd be surprised at how easy it is to find people that are like-minded and willing to work all over the country.
Oh, absolutely.
That's such a huge advantage if you're looking to do any sort of expansion, is if you can have someone that you know and trust wherever you're trying to go.
Well, and right now, like you and I, all the people we talk to, the biggest challenge I have is getting deals. And then they see how we're able to buy deals at 50, 60 cents on the dollar. And like they're so thirsty for that, right? So there's so many people out there willing to, like, hey, I'm in this market. Like, hey, do you want to set this up? And you can drop, plug and play your system right there. We have that rinse and repeat system. And then now knowing that there's just so many people out there wanting to partner up and find deals like that, you can see the growth. You can take it as big as you want.
Yeah, for sure. I mean, and people always talk about in real estate using other people's money. So the kind of method that we're starting to take now is in these other markets is we're using other people's money, but not necessarily to buy the asset, but to do the marketing and to help build out the system. Because, once you do marketing, there is sort of a lag system to that, right? Like there takes time for money to come back between going through the sales process, which can take 30 to 60 days, and then going through the actual real estate process, which on average takes about 30 days. So you're looking at about a 90-day cycle time from when your marketing goes out to when you start getting money back. And depending on your bloat, like what your total cost is, that can be pretty significant, right? That can be $30,000 to $40,000 in outgoing cost. And if you are paying that yourself, you can only do that so much, right? But if you're willing to find someone local, split some opportunities with them, maybe make them a preferred buyer, maybe, split some wholesale fees with them, whatever that looks like, you can grow very quickly because all of a sudden your business is having no money out of pocket and you're basically taking on an investor that you're promising a future return, just like you would with a house flip. It's exactly the same. That's a little bit riskier for them because it's not tied to a levered asset, but the concept is exactly the same. And if you're confident in what you're doing, it's a pretty easy sale, honestly.
Yes. And as the great Brandon Turner always says, part of a deal is better than no deal.
Honestly, though, so some of the places we're going, we have someone we're going to be doing straight profit splits with, but they're funding our entire marketing process. And, for that, it's like, cool, we're going to be giving up a portion of all of our proceeds to him, which realistically, if we were to go and get like a bank loan, is significantly more expensive, right?
Yeah.
But that's easier money for us to get. There's no approval process, and he's a friend of ours. We're gonna make him some awesome money, and for us, it's very easy for us to just immediately go and drop into that system without having to worry about any sort of cash injection needed on our side.
Absolutely. We could fund these markets. That's not where we're at. We're in a good cash position to do it, but then it's the opportunity cost. If you're gonna, like you said, put all this money out into multiple markets at the same time, now you're injecting cash into these markets, and then when other opportunities come up, you can't continue to expand. So it's kind of a give and take.
Yep, exactly. So cool. Well, on that note of opportunities, this is something that's come up frequently with both our investors in our instant investor program, and also too, honestly, just with other people that we've been networking with, is kind of how exactly to determine the best exit strategy for your deals as you get things signed around.
Whether such a good topic.
Yeah, whether you're going to wholesale it, you're going to flip it, you're going to keep it as a rental. And this question seems to be the biggest concern for people who are looking to buy rentals, because they quickly recognize that, first property comes in, if they keep it as a rental, they get the basic loan terms, whatever that looks like, all of a sudden their money's gone. And they're like, well, then how do I keep marketing? And that's a super, super valid point. And we're going to dive into that in just a second. But first, I want to say a few quick things about our Instant Investor program. Investor program is our 12-week group coaching program, which includes a self-driven course and access to our private investor community. We will take you through the full process of how we find our leads, how we market, how we do our sales and follow-up, and how we determine the best strategy for every opportunity that comes our way. On top of that, you will also join a community of other like-minded investors nationwide that are all marching towards the same goals, and you will have direct access to Dan and myself, so you can continue learning and growing with us as we continue to adapt and grow our business. So whether you're a new investor or already established, our systems can help take you to the next level. So if you think you might be a good fit, go to the instantinvestorprogram.com and schedule a call, and we can have you talking to motivated leads in as little as 2 weeks. All right, so how exactly do we determine what our exit strategy is on our deals? Whether we're gonna, wholesale it, flip it, keep it as a rental, and then on the rental side, like there's obviously so many different strategies. Whether you want to like long-term, Airbnb, lease to own, like how exactly do we figure out what makes sense for each deal as they come through? What do you think, Dan?
Yeah, well, like starting with wholesale, right? Like that's the easiest way to just get some revenue, right? So a lot of times you're looking at it as like, what's your financial and cash position? Do you have the cash to sustain a 4 to 5 month deployment on a flip or a BRRRR? Because like those are about the same timeline, right? Like if you're going to flip a property, you're going to take it down, you're going to renovate it, same exact process as a BRRRR. You're going to sell it or refinance, which all takes the same time. So where are you at in a financial position? Because you and I, we've wholesaled some deals that we didn't want to, but to continue the marketing machine and also to build up coffers for, expected, other properties we're going to be taking down. Like we've just wholesaled them. We just wholesaled one right now for a great fee that we know we could make more money flipping, but it's just not the right time for us.
Yeah. One, I think that's so key which when people start out, it's harder to think that way, especially when you're trying to generate wealth and buy long-term properties. Everyone's like, I don't want to miss out. This would be such an awesome rental. But you need to understand that it's more important that you keep your marketing machine going and build out that process and sort of have some consistency there. Because once you do that and you have, shots on goal every single week, all of a sudden you don't really care that much if you miss out on an opportunity because there will be more. Like, I'm not going to say that we haven't like lost stuff or wholesale stuff that I'm like, damn, we should have kept that, which we definitely have. But at the same time, we still made money and we know that there will be more opportunities that will be equal or better. Really I can only think of one property, like really big picture, that I really regret wholesaling. And it was that little duplex that we sold to one of our competitors out in the South Hill because it was kind of janky. But hold on.
Yeah, it was kind of janky.
Pause. Sorry. Yeah.
Bless you.
Anyway, edit that out.
Yeah.
But it was this little duplex. It was kind of janky, but the price, and they're like the tenants had just signed on for a year, but even then, for where we were at that time, we could not afford to buy that property, hold it with under rented tenants, and just wait for a year to be able to do anything with it. Right now, we do that all day because we'd have the ability to do so. But back then, it made more sense. I think we made like a $15,000 or $20,000 fee. It made sense for us to do that, to be able to keep the marketing machine going, even though that property now would probably sell for double what we had it under contract for.
Oh, for sure.
Yeah, with relatively limited work too back then.
Yeah.
Mm-hmm.
It was stabilized already. So yeah, and also I think another point on that too. Sometimes it's also effort versus payoff, because it's okay to be in a different season of where you're at too. Of saying I just don't want to put the effort into it. Like we just. We're kind of negotiating on this property and you're like, hey, should we flip this thing? What's the price point? And I was like, oh, it's kind of tight. And then I looked at it and I was like, this is going to be a renovation that's just going to be like, we're going to be fighting it every way, right? Every direction we go, we're going to make money. Like we have our systems dialed in, but it's going to be a lot of talking to the contractor, run into this, run into that. And it's just like, it's not really worth our effort right now. Like that's okay too. If you're just like, I'll make a quick 10, 15, 20 grand on, as opposed to the $50,000, $60,000 flip, because I just kind of don't want to do it.
Yeah, for sure. And what I think also, as well as you build out more opportunities and more marketing systems, it's easier to project where you're going to need cash, especially as you get properties that you're going to be closing on sort of down the line. You need to make those decisions based off the immediate needs of the business. Because I think something else that is very easy to do, and we've run into this with this business, is you tie up all your money in properties, the marketing machine slows down, and then you start being like, okay, well, I'm going to pay off, I'm going to get this money back from this payoff, this flip, this BRRRR, this refinance, whatever it is, at the end of the month. And then that date rolls around, and for some reason it doesn't happen, right? And now you're completely screwed. And we're dealing with this right now, actually, on this, this condo deal. Where, I mean, who could have predicted this situation when we got into this project? But you want to explain that, Dan?
Yeah. So we have a condo. It's more of a side-by-side duplex, but it's set up as a condo with its own HOA. And the HOA fee is like $50 a month, which pays for the insurance. So you technically don't need to pay for insurance. So not a total bad setup, except for the condo associations had 3 claims in the last 3 years. So their insurance company they use is like, no, sorry, we're only going to give you this much insurance, which isn't enough to cover the actual value, like the replacement value of the property. And then on top of that, the HOA bylaws, whatever you call them, basically states you can't get your own insurance, which is a farce because the neighbor has its own insurance. Like, so you can, but just the way it was written back in the 70s, it says that. And so now we're trying to connect the dots, get the HOA president involved, get the insurance company involved, get the lender involved for the buyer, so that we can be like, all right, guys, what do we need to do? Because like you and I are like, I will pay for anybody's insurance for the next 2 years, 3 years. I don't care. It's cheap, right? Like, just tell me what we can do to close this. Because yeah, we were expecting in a week we should be getting a payoff, which is all of our costs and rehab costs and down payment on this thing out. And now it's like,
well, I mean, because it's a huge amount of money, right? Not like profit aside, you know, $150 grand, you know, and we're projecting taking, you know, the principal in that and rolling that into other deals that we have coming up here really soon, you know, and we plotted it out. And, you know, even with our experience, it's so easy to fall into that trap, especially when it just seems, if it seems too easy, always be suspicious. Because this one, it felt like it was in the bag. You know, we put it up, we accepted an offer for like what, 20 grand over ask. You know, house was clean, inspection was clean, you know, and then classic lender. I don't know why freaking lenders always do this. They wait until, you know, 5 days before closing and they're like, we decided to finally look at your file and it sucks to suck. We're not going to do this. Every lender does that. You know, my lender for my own personal house did that this past summer when we were literally 3 days out. We started like packing and moving and they were like, actually, we're not going to close your on your house because your debt to income isn't high enough. You know, and I was like, what? That makes no sense. And that's the problem with being an entrepreneur as well, is they don't respect entrepreneurial income unless it has a long track record. You know, and 2 years ago, I guess now we're across the 2 year threshold. Back then, we were only 1 year into this. We were making good money, but a bank was like, we're not going to count that. So then, you know, I had to go through this whole process of basically renting the house back from the previous owner and then, you know, going through this whole thing because the lender decided to just screw it up at the last second.
Yeah,
I did.
And you changed.
Yeah,
like you had to change, right?
Yeah, I went and found a different lender, which was more expensive, but they kind of got it and they were able to work with us and figure out what we needed to do. Yeah. You know.
Yeah, I think the moral there is don't accept no for an answer. I mean, that's right where we're at too with this one. I'm not accepting no for an answer. We're going to make it work. It's just. Yeah. And I think the other moral and like this whole kind of story here is like cash management. And that might determine what you do on your exit. And trying to forecast your cash is not super easy because you're relying on third parties to do their job to get you your cash when you think it's coming in. So like we always have to have a buffer when we think the money's going to come back in. And fortunately, we're there at this point where we have other levers to pull if we need to as well. Yeah. So what about flips? Like what do you think, like when we think about doing a flip, like what is in your mind that pops off? Like, yeah, we're flipping.
Yeah. So,
what are those
I mean,
indicators?
for us, I mean, we're big value add guys. Anything that has a very clear, easy value add, I always am heavily inclined to flip that rather than wholesale that, particularly because in our market anyway, most other buyers are not value add buyers, which is shocking to me, but They think they are, but they don't understand that value add doesn't mean, you know, oh, I made the kitchen look pretty. We're talking value add about increasing square footage, right? Like rebuilding the inside of the house to make it more desirable to at the modern level. You know, we've done stuff like knock down walls, do garage conversions, finish basements, anything that you can do to like measurably increase the value of the property that's more than cosmetic. You know, if you like, especially if you increase the square footage of a house, you can mathematically determine what that's going to do to the value. You know, when you go and you run comps, you can say, okay, the average cost per square footage on a house, let's say, is like $100. If you increase the square footage now of that house by 500 square feet, you just increase the value by $50,000. You know, it's not complicated. Absolutely. And if anything, in my mind, those are the best flips to do because you can, like I said, you can mathematically determine what's going to happen, and it actually hedges a lot of the risk. Because if you're just doing a cosmetic rehab, you know, sure, in the most recent market, it doesn't, you can probably turn stuff pretty quick, but historically, you know, buyers are going to not like whatever decisions you make. You know, back when I was flipping houses like 2018, 2019, before it was just a buyer's frenzy like it is now, you know, I'd get feedback like, the buyer doesn't like your door handles, so they're not going to buy the house. And you'd be so pissed. I'd be like, I picked those out. Like, I'm taking that personally, you know? So like for us, anything that can be a value add like that, because those things aren't that complicated and it's very easy to determine. And then besides that, I mean, if it's mostly cosmetic stuff, we like easy deals. You know, if they're like people that are doing like large cosmetic gut jobs, not our favorite, just because it's expensive. You know, you have to have a much better deal to cover that cost because you're not forcing any value appreciation. And I mean, recently, I mean, you know how it's been with like materials and stuff, just like having to plot all that out. Yeah.
It's hard to get. It's hard to get them. It's hard to get what you want. So if you have a systematized approach to like your build package, you might have to go search for new stuff to try to fit that.
You know, and I would say honestly, I would prefer to do a house that was like kind of outdated, that we just left the outdated part alone, but we were able to like finish a basement, right? And just like make the basement like good enough, rather than have to do a house that was like outdated and we're gonna completely renovate the entire thing. But most people are completely opposite.
Yeah, and
though.
Some people. What also it's sometimes too, like if you look at a house and look at the square feet of it, how big is it? Because if it's above 2,000 square feet, like you start getting like 2,500 square feet, you're starting to really have to touch a lot of things. And it gets expensive when you talk about per square foot cost. And so like we've passed up on some great deals, but they're like a 3,000 square foot house because we're just like, the risk is too big of like, once you start into something, you have to keep going, right? And you're renovating this thing. You can't just renovate like one bedroom and call it good, right? You hit the kitchen, maybe the bathrooms, all that sort of stuff. And then all of a sudden you still got 1,000 more square feet to throw flooring on. Right. So that gets really expensive. So I look at that too. Like if it's a 3-bed, 2-bath, 4-bed, 2-bath, like those are typically super good slam dunks for us. And then just to close out what you're talking about in the appraisal value, if you're out there and you've got an appraisal from like a recent property you've done or purchased, look at that. That will tell you exactly what these button pushers called appraisers are doing. They're going to have fireplace counts, bedrooms above dirt, above the basement count, all that sort of stuff. Square feet is a big one. And then also look at the properties they're choosing for comps and kind of understand that kind of that methodology they use. Sometimes there's no methodology to it. But just like looking at that gives you the map. And that's kind of how we've hacked dealing with these sorts of things and understanding like, well, in this property, the extra 200, 300, 1,000 square feet is going to kill. It's going to be awesome. Some other places, when you look at it, it may not actually make sense.
Yeah, well, and I think that's a super valid point, Dan, about the appraisers. At the end of the day, honestly, the only thing that matters is what is an appraiser going to look at for the value of the property. You can make a property so desirable to an individual that they're going to be willing to pay so much more than it's actually worth for it, just because it looks great, like it has all the fun features, whatever. But if an appraiser comes in and they're like, well, this property is way overvalued for the neighborhood, that can literally destroy your entire deal. Unless you have a situation where a buyer's willing to pay that much extra in cash out of their own pocket to cover the appraisal gap that the appraiser just made, and that's even more so the case if you're looking to refinance into a rental, where literally the only thing matters is what the appraisal thinks, because there is no market opinion on it. An appraiser does not care that you have this beautiful property. They will go ahead and pick the worst properties that have sold nearby that are like the most like kind in terms of size and age and all that sort of stuff, and completely ruin your entire thing.
Yes. Yep. Yeah. And like, if you're relying on that, and well, I should say, let me step back. And this is where people get themselves into trouble, is they over renovate. They get this like, oh, I need to do this. I need to make this that cute. And that's where you get yourself in trouble on that appraisal, because you over renovated. You bought the $4 a square foot tile instead of the $2 a square foot tile, those sorts of things that really add up over the whole project. Which is actually a good pivot point too, because renovating a flip and a BRRRR property are two different types of renovations. And most seasoned investors are going to tell you their rental properties have less quality. I shouldn't say less quality, but less fine finishes in them as compared to a flip. Because if you're selling a flip, you're selling it to a retail buyer that you need to get the house up to the neighborhood expectation. And you do want it to look shiny and clean. Doesn't mean you over renovate it, but you might have a higher end faucet fixture, higher end light fixtures, a little bit different few things, doodads and that. But like with a rental property that you're going to rent, like you need to make that thing as bulletproof as possible, and you don't need to buy the $200 faucet. You need the $79 faucet. That's going to
well, I mean, you can say the same thing as well on a flip though, by neighborhood. Right, like people will over renovate properties in a C-class neighborhood, and it's always, I always see this too, where people be like, "Oh, what C-class neighborhoods deserve to have nice houses as well," and it's like, you're so right. But if you're flipping like 2 houses in your life, go ahead, make it freaking awesome. If you're doing this as a business, those little charges are gonna come out to hundreds of thousands of dollars, if not millions of dollars worth of revenue when you get into volume. And if you're willing to give up $1 million that have, some nicer fixtures and flooring in C-class neighborhoods, you're a better person than me. Like, honestly, good for you. That's awesome. But I'm not willing to do that.
Well, you know what? This is like a point of contention for me too. Like, this is a little rant here because like I'll see local guys or other people on Instagram. I know what neighborhood they're in. I'm like, you over renovated that place way too much. It's not right for the neighborhood. But the thing that pisses me off most is they're not spending the money that's actually good for the neighborhood, actually good for the homeowner, because they still have a janky ass electrical panel. The roof is still not right. You know what I mean? And so I'd rather fix those things that actually make it like a good home for somebody long term than adding, expensive ass fancy, light fixtures that are cool, but not for that.
But instead what they do is it looks good and they get some out of towner that's moving in here that's like, I don't know that there was a shooting down the street last night. This is a beautiful home. Yeah. And then when the inspector
you just covered up the bullet holes.
And then when the inspector comes back, it's like, this circuit panel is completely messed up. They're like, oh, we'll give you a $1,500 credit. They just like make it a whole situation for the future buyer. Oh God, it's a weird deal because like it's like a different form of ethics, honestly. And it's like, I don't know, is that more sales? Yeah. I don't know what's less ethical. Is it skipping those things to make the house look nicer, or is it fixing those things and leaving the house crappier, but as a result the neighborhood like isn't going to be as nice? I have no idea.
Yeah, I don't know. You know me, I'm an infrastructure mechanical guy, because if you can keep a house operating well, it's going to still be a good house the next time they sell it. But I don't know, so to summarize it, I guess between wholesale, flip, and rental, I think one of the top ones, and I'll let you kind of throw yours in there, is what is your financial position at that time in your business? Can you take this on? And also, what are your goals, like long-term, maybe the next 12 to 36 months with your cash position? And so like that's a big indicator of what we're going to do in our business. And I guess one quick thing on that too, when it comes to rentals, people have been asking about the best way to determine the ways to rent stuff, whether that's a short-term rental, rent by the room, a long-term rental. Always, look at the different options for it. It's relatively easy to crunch numbers these days. If you just look at like market rents, or, there's like different platforms like AirDNA going for Airbnbs and stuff like that. But I think one of the biggest things is don't try to force a rental property to be a deal by doing something that's too wacky, just because you're so desperate for cash flow. Because I can tell you right now, some of these Airbnbs we bought, I mean, I don't know. They're ones that were pretty tight as like long-term rentals. Now we're into like this Airbnb game. Sure, they're in town, but we know so many people that are like, Airbnbs are just awesome here. And I don't know what the hell they're doing, because ours have been freaking booked, but they just don't make that much money, and they're such a headache. Like they are not awesome at all. But I think people, especially right now that I see getting Airbnbs, not a lot of them are experienced long-term renters, so they're not comparing it to anything else. And so they also don't know the actual cost of owning a property. That is super important. Besides just your budgeted set-asides for vacancy and CapEx and OpEx, like what are those actual costs? Like we're looking at it as long-term rentals. We know what those costs are. We've done it enough. And so when you fold all that into a property ownership, and you're like, is it really worth the effort? For me, it may not be. Still yet to be determined, but it may not be in our market locally.
Well, on that same note too, I've noticed that those people that are really into that, they aren't necessarily buying well. They don't have the buying opportunities that we do running our own marketing systems. So for their context is, if I buy a property on the MLS and I do a long-term rental, it's going to make me like $70 a month. That's not even worth it. But if I do it as an Airbnb, it's going to make me $400 a month. And from when you look at that perspective, that makes a lot of sense. But when you're from our perspective, we're already buying with such a huge equity position. You're already making so much money up front, and you're like, okay, long-term rental, I've cashed out $25,000 more than I had into it when I did my refinance. I'm already at base zero. At that point, to be completely honest, $70 or $100 a month versus $400 a month doesn't really excite me if it's going to mean I'm going to have to do a bunch of work every single month. Like, I would rather just go and focus on the next thing, and I'm going to make way more than, the $3,600 a year spread on that. When I can just go and do more deals.
Yeah. And I think that's a good topic. Maybe we'll save that for next week, is like cash flow versus equity versus
good one.
long-term and short-term investing, just kind of that whole concept of like how we make those determinations and what you should be looking for and that sort of stuff, because it may evolve and it may change as you go, as it has for me, but also there's some fundamentals in there that I think are super key for people to pay attention to when they're actually trying to take down properties, to not press on a deal and make something work.
Absolutely. That's a great topic. We should definitely write that down so we don't forget to do that next week.
Yeah.
So perfect. All right. We're coming up on time there. So thanks for listening, everybody. You should all go and subscribe to our podcast. Start downloading some episodes too. We're told by our producer that that's one of the best ways to start boosting our algorithm. So go ahead, just go download all of them, then just delete them off your phone if you stream them. I don't even care. Yeah. Like just go and do that. And then what that'll do is that'll start to, on the back end algorithm of all the podcast players, start to make us show up a little bit more for people. And then you go and subscribe to them as well. Those are the two metrics that really, really matter to the podcast hosts out there. So do that. Go ahead and follow us on Instagram at Collecting Keys Podcast. We're starting to do some different reels and things on there with different highlights that I think are going to be super valuable for people. You can follow Dan and I on Instagram. I am at Mike_invest. Dan is at InvestorManDan. Same thing there. We're going to be starting doing a lot more reels and that sort of things, talking about kind of what we do day to day and different things that we are learning with this business that you can benefit from as well. And aside from that, go check out our Instant Investor Program. It's at instantinvestorprogram.com. It is a 12-week course to help you build a business exactly like the one that we've built in a 12-week span rather than the 2 years it took us to do it. It's literally the exact playbook. And along with that, you will get to work directly with us and with the other community of investors that we have in there that are basically going through the same path, all around the country. We've got people in, I think, 5 states now, and everyone's starting to get after it. People are starting to get some great opportunities, and I think we have our first guys gotten a deal out of it in the 3 weeks that it's been going. So Ooh, I think
there we go.
Exactly.
Awesome.
Yeah. So instantinvestorprogram.com. Go schedule a call. I'd love to see if you're a good fit. Besides that, Dan, go ahead, send us off.
Yep. Yes, Investor Man Dan signing off. Come back next week. Mike and I have some awesome stuff in the works. We're actually getting organized on this whole thing, and I think it's
try less cowboy it a little bit, but yeah, we're figuring it out. So perfect. Yeah. All right. Thanks, everybody. See you next week.
Yeah.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.